Welcome back. So in the last video we covered trade discount. In this video we'll be covering cash discount. Now cash discount is a bit different from trade discount because it involves double entries, some more calculations as well. So cash discount is again offered by the seller to the buyer, but at the time of payment, when the buyer wants to pay for the goods that he purchased on credit, for instance. So at that time, if there is some discount involvement, that will be cash discount, right? Because he has come now to pay for the goods that he purchased earlier. At that time, if the supplier offers another discount, that will be called the cash discount. And why is that offered? It acts as an incentive for quick payment, or to encourage early payment or payment on time. The supplier offers a cash discount, and usually the terms of cash discount are communicated at the time of selling goods on credit. For instance, if the seller says that if you pay within 15 days, I will give you a 2% off, or if you pay within 1 month, I will give you a 5% off. And if the buyer actually pays within that time period, so he will avail this discount, right? So this discount is deducted from the invoice price, not from the list price, from the invoice price. And we already know how do we arrive at invoice price. We know that invoice price is calculated after subtracting trade discount from the list price, that we have covered in the trade discount video. So on this value, if I am offering a further discount, that will be the cash discount. Now we also know that in trade discount we don't make any double entries. Trade discount is not recorded anywhere. It was just shown on the invoice. It was a reduction on the list price or the basic or the retail price. But cash discounts are recorded, and there are two types of cash discounts. The first one is discount allowed, and the second one is discount received. How are these recorded? Where are these recorded? We will cover that in a bit. But first, recall what we have studied so far. We know that trade discount is offered on the list price, which is the basic price, and we subtract trade discount from the list price to arrive at the invoice price, which is recorded in the purchases daybook, in the sales daybook. And when we come to cash discount, that is offered on this price, the invoice price. How is that calculated? That what is actually paid is calculated by subtracting cash discount from the invoice price, so that we arrive at the amount which will actually be received from the buyer, or which will be paid to the supplier. Moving forward, now cash discounts, the biggest difference between the two is that cash discounts are recorded in the books, because they are part of the double entry bookkeeping. But where are they recorded? First of all, they are recorded in cash book. This is the day book where the cash discounts, both discount allowed as well as discount received, is recorded. Then they are posted to the ledgers as well, in the general ledger, in the sales ledger, or in the purchases ledger. In the general ledger, we know that there are three types of ledgers, right? Sales ledger, purchases ledger, and general ledger. In general ledger, we maintain the discount allowed plus discount received T account. Then in the sales ledger, that is the debtors account, we record the discount allowed to complete the double entry. And in the purchases ledger, which is for the suppliers, we keep all the suppliers T accounts in this ledger. We record the discount received from the supplier. And then lastly, in the income statement as well, if it is discount allowed, that will be recorded and is as an expense. We will be covering this in detail in a bit. And if there is a discount received from the supplier, so that is an income, that will go under incomes. So you see that there are multiple impacts of discounts in daybook, in ledgers, as well as in financial statements as well. So discounts, cash discounts are recorded. Trade discounts are not recorded. We make double entries, we transfer them to the T accounts from the day books, we record them in the financial statements. Cash discounts only, not trade discounts. Now let's cover the types of cash discount one by one. First is we have discount allowed. Now discount allowed is given or offered by the business to its customers, right? For instance, I have a business. If I want the customers to pay on time, to encourage early payment, I can offer them the cash discount, and the discount that I will be offering to my customers will be discount allowed. That will be called discount allowed, so that they clear their dues on time. Now if I am offering a discount, this means that, for instance, if I was supposed to receive 500, this was the invoice price. If I was supposed to receive $500 from my customers, but if I say that if you pay me early, I will give you a $50 off, so you can pay me just $450. So am I receiving everything that I was supposed to receive? No, I'm receiving less. So discount allowed is an expense for the business because the business is not receiving the amount in full. The discount allowed acts as an expense. That is why it is debited, right? It is shown as an expense in the income statement. It is debited. Let's see the double entries as well through an example. For instance, Amna owed Sarah $100. So who is the customer? Amna is the customer and Sarah is the supplier. But since Amna paid within the time limit of 30 days, very good, Sarah allowed her a cash discount of $15, right? So you don't have to pay $100, pay $15 less. So how much will she be paying? 100 minus 15 is $85. Amna will be paying $85. Now how will Sarah record this transaction? Sarah is not receiving 100, she is receiving only 85. Now let's make the double entry. First of all, this transaction will be recorded in the cash book because it involves cash, of course, and all the discounts, both discount allowed and discount received, they are also part of the cash book table, right? Discount allowed is recorded on the debit side of the cash book, discount received on the credit side in a 3-column cash book. Now let's make the double entry. That how will Sarah record this transaction? First of all, Sarah is receiving, let's say, cash or bank. Through cash or bank, she is receiving $85. That will be debited in the cash book. And we know that she is not receiving $15. So how will that be recorded? That is a discount allowed, right? She allowed this amount of discount to Amna, making that as an expense, and that will also be recorded in the day book, which is cash book. So discount allowed will also be debited. Now the debit part is complete. I have debited cash book, that is cash or bank, with 85. I have debited the discount allowed as well. Now I just have to complete the double entry by crediting an amount against the customer. The customer was Amna. Now how much should I credit? 85 or 15 or full 100? I'll be crediting her with $100, right? Although she paid only 85, but I allowed her $15 of discount. So now this $100 has been settled completely. She doesn't owe me anything else. She doesn't owe me the $15 because I allowed her that discount. She doesn't have to pay me that in future. So if I make Amna's account in Sarah's sales ledger, in sales ledger we keep all the customers' account, right? So in the beginning she owed me $100, but since she made the payment within 30 days, she got a discount, further discount of $15. So how will that be reflected in Amna's account? See, I am crediting Amna over here by what values? By these two values to complete her, to close off her account. So she paid me, for instance, through bank $85, and I allowed her a discount of $15. Now her account is balanced. She doesn't owe me anything else. That is why when we covered over here that where are discounts recorded, first of all they are recorded in the day book, cash book, and in the ledgers as well. In the sales ledger, discount allowed is recorded, and in the purchases ledger, discount received is recorded. So this entry will be made in the cash book. Then from the cash book, discount allowed will be transferred in its own account, being maintained in the general ledger, and Amna's account will be credited with the same value in the sales ledger. We know that we don't transfer cash or bank in any ledger because cash book in itself is acts as both a ledger as well as a day book. So discount allowed will then be transferred to the general ledger, and Amna's account will be credited in her own account in the sales ledger. Right. Now let's understand this from the perspective of discount received. Discount received, as the name suggests, this is what the business is receiving from its suppliers. So this will act as an income, right? Now let's read. This discount received, it is received by the business from its suppliers when the business pays its dues on time. Previously we were receiving cash on time, now we are clearing our dues on time, so that is discount received from the supplier. Now as we will be paying less from what we were supposed to pay, it acts as an income in the income statement. So discount received is an income, discount allowed is an expense. Let's understand this as well through an example. For instance, Safa owed her supplier Asad $500, but since she made the payment within the time limit of 15 days, Asad gave her a cash discount of $50. Wow. So how much she paid? 500 less 50, she paid only $450. How will Safa record this transaction in her book? Now she is the one who is paying, she is the one who was offered the discount. Now from her perspective, how much is she paying? She will be crediting cash with $450. Why $450 and not $500? Because she received a discount of $50, which will be called discount received. Discount received is an income. And discount received will be shown on the credit side of the cash book, while showing a cash outflow from the credit side. So discount received will be credited, and on the debit side she will be recording the supplier to whom she made the payment, that is Asad in this case, by 500 to complete the double entry, not 450 but full value, because now the account of Asad has been closed off. If I make his T account in the purchases ledger of Safa, the supplier's account will be shown in the purchases ledger, right? And she owed him at the beginning $500, but she paid only $450 because she availed a discount of, this will be called discount received, of $50. Now she doesn't owe him anything in future. That is how we make the double entry for discount received. Again, this cash won't be carried forward to any ledger because this has been recorded in the day book, which acts as a ledger as well. Discount received will be recorded in the general ledger in its own account by crediting $50, and Asad's account we have already made in the purchases ledger. You can make these entries in two sets as well. For instance, first set would be of the payment that she is paying her supplier $450, so supplier will be debited with $450 and cash or bank will be credited with $450, and second set would be of the discount that she is getting. So again the supplier will be debited with the discount received, and the discount received will be credited with $50. So this is how you can make either this double entry in two sets or in a single form as well, but this is what we show. This is the same that we show in the T account as well as a breakup. So what we need to remember about cash discounts is that there are two types of cash discounts: discount allowed and discount received. Discount received is an income for the business which we get when we are clearing our dues on time, and discount allowed is an expense which we offer to our customers. They are recorded in the day book, which is cash book. Then they are recorded in the T accounts as well. They are reflected in general ledger because discount allowed and discount received accounts are kept in the general ledger. In sales ledger we record discount allowed, which is against the customers, and in purchases ledger we record discount received, which is against the suppliers. And then when we are preparing financial statements, both the discounts become part of in a statement of profit or loss as well. However, trade discounts are not recorded anywhere in the day book or T accounts or financial statements. They are just shown on the invoice, right? Now that is all about cash discount. In the next video we'll be covering some really interesting past paper questions